Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar, we have already seen the CPI flash and core flash inflation data out of the euro area. That data was a little bit disappointing. We had the CPI figure coming in ahead of expectation and the core figure actually ahead of the previous month's figure. So inflation still a challenge in the euro area, as we know. It's sitting year on year at 8.5%. This afternoon, we do also have some US data in the form of weekly unemployment claims. And then late this evening, FOMC member Waller speaking. Let's look at some charts. And starting with the US dollar, so it all starts. That downtrend is still in place, although we have seen a rally from oversold territory take us to trendline resistance. So quite a strong rally. We've had a bit of a bearish reversal here, and the suggestion is that, well, maybe we could see a continuation of that downside. At this point in time, could be more of a consolidation between 103.70 and 105.30. But certainly, while that longer-term downtrend is in place, we still consider keeping a short bias to trades on the US dollar, and that is up until such time as we see a break above this major high. Higher highs and higher lows are the building blocks of an uptrend, and we don't have those just yet. We still have a series of lower highs and lower lows. And so our key level here is 105.30. And once we get above that, if we get above that, that's when we start changing our sentiment and our bias to trade on the US dollar. But at this point in time, we've still seen a strong rebound from oversold territory. We have had a bit of a bearish reversal at 105.30, although the price does seem to be consolidating between 103.70 and 105.30 at this point in time. Looking at the euro dollar, so we have this longer term uptrend is in place. We have the price above that 200-day simple moving average, that blue line on our chart, and we have it across of the 20 below the 50. And it just highlights that we have been having a bit of a short to medium term correction of that longer term uptrend. We are seeing a bit of a reversal now of just above this 1.0480. So we still consider keeping a long bias to trades on euro dollar for the time being. We are coming off a little bit here, but we do have this bullish price reversal just above that support. We're looking at the longer term trend in terms of how we're keeping a bias to trades. The upside target on that, we're looking at about 1.0800. And if traders are long, they might consider having a tight stop loss and a close below that 1.0530 mark. This rebound that we have seen is also accompanied by that oversold signal that moved out of oversold territory. Moving over to cable. Now, I think here in the short to medium term, we do have the price whipsawing through those moving averages of 20 and 50. That's a suggestion of a short to medium term consolidation in price, although we are still above that 200-day simple moving average. Not that far above it, so that longer-term uptrend is coming under pressure. We've highlighted this with the dotted lines, a bit of a falling wedge formation, which is a bullish chart pattern. I think maybe, if you are looking at getting long on cable, pound versus US dollar, maybe waiting for a break above this trendline resistance first before targeting a move back to about 1.2258. Now, where we start to change our bias, is when we start looking below this 200-day simple moving average, or this low here, which is very close there, about 1.1850. In that situation, we'll be looking at reassessing our trend bias to trades there. Doesn't mean we can move into a new downtrend long term. It could mean just a broader consolidation, in which case we'll be looking at just trading between the levels. Looking at some indices now and starting off with the NASDAQ. We do have a bit of an interesting picture at this point in time. So if we zoom out a little bit here, we can see it's been a long-term, a downtrend that's been in place since about January 2022. And then we've had a nice break of that, and we've had our first real pullback since that move higher. Now, we are still falling. Might be a bit premature to jump in long just yet. But what we are looking at is waiting for the price just to break above that black trend line on our charts, provided this retracement doesn't go too far. So we want to see a price reversal and move above that before looking for long entry. What is interesting is you do have a bit of a golden cross here, which is the 50 period moving average, our green line crossing above that 200-day simple moving average. And for me, when I trade moving averages, I do like to wait for the first pullback. That pullback has actually occurred into that crossover. So final confirmation for me, ideally, what I'd like to see is a price reversal, a move above this trend line, and a nice little move out of oversold territory to support from our stochastic indicator just to confirm that we are resuming that shorter term move higher. But the moving averages are suggesting that that trend bias has changed, and we do have the price trading above that longer term trend line as well. And this is the first pullback from the rally we have seen at the beginning of the year. So an interesting one to watch. S&P 500 pullback has been really started to test that trend, and we are below that 200-day simple moving average now. The 50 is still above that 200, so we had that golden cross somewhere about here. And so, suggestion is that there's a slight bias to the upside, but for me right now, I'd say as we're breaking through these levels and we started trading below these moving averages, that we are in a bit more of a broader sideways consolidation on this index right now. If we're looking to get long on here, just using this trend line as a filter, waiting for a reversal and a close above that. But we are falling now. Next level of support is sitting at 3,880, and we are also oversold. So ideally, I'd like to see a move out of oversold territory, either a break above this trend line or a bullish reversal closer towards this 3,880 level before looking at long entry, and then targeting to move back up to about 4,050 odd. Alternatively, we start breaking down. Probably still prefer to just sit on our hands, see how far that weakness takes us. Next level of support there, 3,760. So for me, looking for long positions on a break above this trend line or a bullish reversal of support about 3,880. Wall Street, the Dow Jones, definitely sitting in a broad consolidation. So we are starting to see lots of consolidation starting to form. The support of that consolidation is 32,475, resistance sitting about 34,660. And we just marked a bit of a level here in between about 33,530. So we actually do have a bit of a bullish price reversal here, a bullish harami. If we look at excluding today's candle, the two previous candles, for me, I'd like to see a bit more conviction here, a close above this trend line, this black trend line on our chart before targeting a move back to at least the midpoint of this range at 33,530, and where that suggested failure is if we instead move and close below this support of this range, in which case we'll be looking for our next downside support targets, initial one being the 31,700 odd. The DAX has been quite resilient. The Germany 40, as it's labeled on our platform, the correction has taken place on a very short-term sideways move rather than an actual downright pullback in price. So we have this uptrend in place. We do still have a bullish line of our moving average 20, 50, and 200. We are in a bit of a very short-term consolidation. We can mark the levels. I've just drawn in what looks to me like a little bit of a wedge type formation. So we need to get some evidence that this is getting going again, and we're out of the consolidation for conviction of a directional move. If we break below support 14,960, I'd still be prepared to wait for a little bit of weakness back towards our next level of support, 14,605. And I'll be looking for at any one of these levels a bullish reversal before long positions. If it starts to extend a bit steeper than that, then I'd reassess the bias to trades on the Germany 40 or DAX 40. Looking for long entries, bullish reversals at one of our support levels, or a break above wedge resistance, in which case we start targeting that historical level of support resistance, about 15,715. If we can start getting through that, we start looking at that 16,300 mark. FTSE has also been quite a resilient index over the last little bit. We do have another one of these consolidations forming, and that consolidation is really quite a slow grinding pullback from new high territory. So that tells me that it's not any type of eagerness to sell off the index, even from all-time high territory at this stage. And so still looking at this as a bit of a bullish pattern. Do have a bit of a bullish harami here, but for conviction for a long entry, we want to see a bit more momentum to the upside. We have dipped into oversold territory through that consolidation. So looking for a close above wedge resistance before we start targeting 8,040 again on the upside. When we get through that, we can start looking at channel resistance as further targets. We did have a historical target there, or a channel target. Previous one probably could be updated about 8,185, but we'll keep it conservative for the time being. All right, moving over to some commodities now, and starting off with Brent crude. Brent crude has been in a downtrend for quite some time. Longer term, but in the short to medium term, there is definitely a consolidation. So our approach continues to be looking for short entry into any type of strength, provided that 88.70, this level here, remains resistance. So at the moment, we have a rebound. We had a move towards the support level about 79.50. We fell short of that. We have a bullish price reversal here, which is a type of engulfing, and now we are rallying. Now that rally, we're not too excited about getting involved in the rally to the upside. We'd only be looking at long positions if we see a break above 88.70, a strong move above, and then possibly the first pullback from that. Until such time as that happens, we're looking for bearish reversals before these resistance levels for short entry and trading in line with that longer term trend. Only when that trend is broken will we reconsider our bias, and that level that we're looking at there is 88.70. Now spot gold, showing some mixed signals. So we have had a short to medium term correction of what is now considered a longer term uptrend. We note with these lines, I'm just going to remove these moving averages from the charts just to clear up the picture a little bit. So in one of the notes that we put out, we talked about this falling wedge type formation, this falling wedge being a bullish suggestion in the current context, and really highlighting that the momentum on the downside had slowed, because you see how there was an aggressive move lower, and then it really just started to grind lower rather than free fall like it had been doing before. We're looking at a break above wedge resistance for long considerations. We have had that initial target there is 1,845, a conservative target. We have just about reached that. Certainly, still think that is the indication is a resumption of that trend right now. We want to see the price break above 1,845 before we start targeting 1,875 as our next level up. Traders who are long might consider having a stop loss either below this reversal low. It was 1,820 level, depending on their threshold for risk. Iron ore, interesting one. Obviously benefiting from renewed demand from China, key ingredient used in making steel, and certainly a key commodity when we look at miners, a lot of the diversified miners. Does make it is quite a profitable metal for a lot of the diversified miners, such as BHP Billiton, Anglo American, Rio Tinto, to name but a few. We've had this consolidation. We've had a break to the upside. We've had our first pullback. Now that pullback's taken us back into the range, but as long as we're above that halfway point of that range, we're fine with that. We've had a pullback, and now we look to be extending that. So we had this nice engulfing or morning star type pattern. If you look at these three candles together, initial target there about 896 on the way up. I think if you are trading that commodity, 860 might be a consideration for a stop loss or close below that. If you aren't trading that, but you are trading the miners, definitely want to watch relevant to those underlying miners, diversified miners. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for the weekly unemployment claims. That's coming out just in a little bit. And this evening's FOMC commentary from member Waller.